Good evening, grade nines. It's time for another accounting equation. So, first of all, I'm going to do the example because I didn't include the example in the answer book, and now I just need to find my answer book. There we go. There's my answer book. And now, anyways, no, it's not that one. Okay, I'm just going to do it here. So I'm just going to add. I thought I had one for the accounting equation as well, but that's fine. I'll just quickly create one. So insert a table, amount, debit, credit, assets and equity liabilities. Okay, there we go. Oh, and then I need a number. Okay, so we need to analyze the following according to the accounting equation. Maybe it's a good thing that I have it this way because now you can, on your side, tell me what is going to go into this accounting equation. So I hope by now you already know that we have the first step of identifying the accounts. Then once we have the accounts, we have to say whether we are going to, and now you need to think on your side, whether we are going to do what? Whether we are going to debit or credit the account. So account debit and then the account credit. And then obviously this is a transaction in a business, so we need an amount. And then we are going to say, does it affect my assets, my owner's equity, or my liabilities? And how? Because that's obviously the idea here. So there's no ticking going on here. I've seen a lot of ticking in my assets, owner's equity, and liabilities, and I don't know why, because I never tick my assets, owner's equity, or liabilities. I say what the effect is. Okay, so if we're looking at the example, then we're going to say that our account debit and credit is as follows. The owner withdrew 500 Rand from the business bank account for personal use. Identify the two accounts. So the owner withdrew from the business. Whenever the owner takes money out of the business or anything else for that matter, then it is considered drawings. So the owner is taking something from this business, therefore he has more drawings. What is he taking? He's taking money. He withdrew money from the business's bank account. So the account is for the owner is drawings, and the account for money that's leaving the business is bank. So we have drawings and we have bank. We have more drawings, we have less bank. So drawings is part of my dead accounts. Remember, dead click, all the dead accounts increasing on the debit side. So that is my drawings. My expenses, assets, and debtors control, they increase on the debit side. And then the click accounts increase on the credit side. There we have capital, we have loans, we have income, and we have creditors control. So drawings is a debt account, increases on the debit side. The reason why it increases on the debit side is because the accounting rule states that equity increases on the credit side. And remember that drawings decreases the owner's equity. And that's why it's on the debit side if you want to know a bit more. Okay, so I have more drawings and I have less bank. Bank is an asset. Assets, if they increase on the debit side, it means that they decrease on the credit side. The amount is 500. So I said I have less money and I now have less owner's equity because the owner can only take that much. If he has taken his 500 Rand, he can't claim that 500 Rand again. It's now done. You had your chance. Okay. Right. So then we move on to the actual transactions there. And now it's going to do that. So I think I'm just going to say number one. I don't want that space issue now. Okay. Purchase a new laptop. What are laptops? Laptops are computer equipment or just equipment. And 15,000 Rand was paid by means of an EFT. So we paid, therefore we have less money. Okay, so we have more equipment. Ooh, frack, there we go. More equipment and we have less money. The amount that we paid was 15,000 Rand. So I have less money, so less assets. But I also have more assets because I obtained equipment, and equipment is also an asset. Therefore, it is possible to have a plus minus for your assets. You can also write it the way that I prefer, like that, a plus minus. Right. Then number 2. Paid the monthly insurance premium 800 Rand. Once again, you paid for something, so you have less money. What did you pay for? You paid for insurance. Insurance is a monthly payment that you make. You never own the insurance company. You never own anything. It's just a service that they're rendering to you, so it is an expense. Insurance, you made payment, you have less money, therefore bank, 800 Rand. I have less bank. I now have more expenses. The more expenses I have, the less profits I have. Who gets all the profits? The owner gets all the profits. Therefore, if I'm going to say that I have less profits, it means that the owner can take less money from this business. So, minus for owner's equity. Number 3, sold goods for cash. The goods were purchased for 7,000 Rand. Okay, so that's good. You know that whenever you sell goods, you either receive the money or a debtor now owes you the money, right? So you have sales, you receive money, or a debtor owes you money. In this case, you receive the money, you are happy. But now you need to let go of your trading stock. So you no longer have the trading stock that you paid 7,000 Rand for. So you received 10,000, but before you were able to sell the goods at 10,000 Rand, you first had to purchase the goods for 7,000 Rand. So you now need to say, I have more money because of the sales. I received 10,000 Rand. So I have more money in my bank account. I have more profits going to the owner. No liabilities affected there. But in order to have the sale, I had to let go of my trading stock. So trading stock is an asset that I now have less of, trading stock. And the amount that I paid for that asset was 7,000 Rand. Okay, because I made a profit. So this is what I paid. That was the selling price. I made a 3,000 Rand profit. And we are going to say the amount that we paid for this trading stock is the cost that we had to incur in order for this sales transaction to take place. Therefore, cost of sales, expense, right? So it's no longer an asset because it's not mine anymore. It is now the cost that I had to incur in order for that sale to happen. Therefore, I have less assets because I have less trading stock. I now have more expenses, therefore less profits going to the owner, no liabilities affected there. Okay, next up, obtained a new loan from First Bank Limited. So you obtained a loan. What happens when you get a new loan? The bank gives you money. So you now have more money. Therefore, you have more bank. So whenever you have more money, you debit bank because it's an asset that you now have more of. Why do you have more money? Because you got a new loan. Is that loan now your asset? Is it yours? Whose is it? The loan is due to the bank. You must at some point repay the bank. And whatever you still have to pay to someone else that you owe to someone else is a liability. And liabilities increase on the credit side. The amount is 100,000. So you have more money, no owner's equity affected there because there's no capital, there's no drawings, there's no income, there's no expense, but there is an additional liability, so plus for liabilities. Okay, so that's your accounting equation.